Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News Channel by wavestrategy.com. And in today's session, I'm going to talk about some basic methods of identifying where is the supply, where is the demand. And based on that supply and demand zone, you can probably try and look forward to form a good trade setup. And you can apply these techniques across the time frame. You can apply this technique on Nifty or stocks. You can also apply these techniques on any of the time frame and try to look at what is happening to the markets and where you should enter the position, where you should exit the position, how you should look at probably pyramiding when the positions are going in your favor to and at the same time you need to put a very strict stop loss so that you don't end up losing substantial capital. So all of these things are very important. I have been talking about in the eye-opener session last week and it went fabulous. There was so much of response from the people and it was wonderful to address them. I'm going to conduct a training on Master of Technical Analysis on 2nd and 3rd of March and a Master of Waves program which is going to be conducted on 6th and 7th of April. Probably you can look forward to attend those trainings and become the Master of Trades is what I'm calling. The program, both the modules are now known as BMW, which is like become market wizard. So that is the entire intention of one can become a market wizard and also BMW. I'm sure everyone is aware about the car. So there is a possibility where you can make so much of profits in the markets if you trade systematically in a scientific way, following certain tools and methods that I am going to be giving in those in those training sessions. Let's move on further to the. For more information, you can also visit the website wavestrategy.com. For this training, you can register there. We have limited seats. Let me now move on further and start with my chart and what is happening with Nifty right now and what are the key support and resistance levels that you have to look forward to. So if you can see my screen, this is Nifty daily chart where we saw a very sharp fall from 11,700 to the lows of 10,000 and then a bounce back on the upside. Post that again we saw a sharp correction from 11,100 towards the lows of 10,600. If you remember in last week I said 10,580 is the key level that one has to look forward to because that is where the time cycle lows are also placed. So 10,580 3 to be exact, and the low formed by the Nifty in the recent sell-off was 10,585. So that low is protected, and from there we are seeing a positive trend again emerging on the upside. If you look at the entire chart very carefully, Nifty has not been doing anything over the months. I would say it has been quite some time, but it has been moving broadly in a very big range. So it's best to identify. So this range in which the Nifty is moving, I would call it as a supply and demand zone. We will identify where you should look forward for creating long position and where you should look forward for creating short positions. So if you look at the lower end of the line, which is the red trend line, and if you can see the screen, you will be able to clearly see what is Nifty doing right now, and it has been moving absolutely in a range. There is just absolute no movement which is happening beyond this range. The entire movement and volatility is happening within the range. So the lower end of the range is the line which I have connected right now, and this is I'm going to call this as a demand zone because as soon as prices reaches here, there is some demand which starts emerging in the markets and the index starts going higher. At the same time, there is a supply zone. So this is a supply zone which I would call where as soon as price reaches near the level of 10,980 is the supply zone, we start seeing some movement on the downside. So that's the supply zone because that is where there is a lot of selling which starts and Nifty has been failing to do anything around those zones. At the same time, there are two outliers if you look at it. The first one is on the bottom side. This is the outlier on the downside. And an outlier is something which is beyond the supply and the demand zone, a false move, I would say. And this is an outlier on the upside. We saw a false breakout on the upside. We saw a false breakdown on the downside. But Nifty did not do anything and again started moving in a range. My observation over the years of experience is that whenever there is a move on the downside which is false, there is an equal and opposite move sometime in the future to offset that kind of an extremity. So there was extreme pessimism which resulted into a downfall and a recovery on the upside, and to offset that we had an extreme optimism on the upside and the reverse on the downside. That is how Nifty has behaved. And if you remember last week, I said it's going to be very important to see how Nifty behaves at 580, and if there is a bounce back from those levels, we are expecting an upside retracement. So here it is, the upside retracement that I talked about in the previous session has come very prudently, and we are start seeing a move on the upside. Again, I am expecting this move to go higher. However, you need to use a strict stop loss. For using the stop loss, you might look at simple methods. I'm going to give simple techniques that you can use on the charts, which are going to give you a simple method to use a stop loss. If you look at a daily bar chart, in this entire downtrend, there is not a single time we have seen a close above the prior bar's high. So unless we see a close above the high, the overall trend remains bearish. Over here, we saw a morning star kind of a pattern, a 3 candlestick pattern, and a move on the upside. So this was the first candle which confirmed that today was the first candle which confirmed that this morning star pattern is a valid one and gave a positive break. So you need to use a stop loss which is on closing basis below the prior day's low. Unless you see a close below the prior day's low, stay on the long positions. That's a very simple and powerful technique that you can use. And ride this trend. Do not forecast the trend. For forecasting, I use Elliott wave, Neo wave in order to forecast the trend. Do not forecast the trend. Simply keep riding the trend unless we see a reversal happening. That's a powerful method that you can follow. That unless and until there is a reversal happening, you do not change your stand. Do not forecast based on news. Do not forecast based on events. Do not assume reading newspaper that this is what I think is going to happen. Do not do any of those things. Simply on the closing basis, look at the market, see if it is closing below the prior day's low. If yes, exit your longs. If no, continue with the long positions. If you follow this simple one method also, it's going to give you a very strong indication on what is the direction of the market, how to trade in this trend. If you look at the daily chart, you will get that. If you are a very short-term trader and want to do it on an intraday basis, look at the chart, how it has been behaving. If you look at the chart here, you can clearly see that there has been not a single time a close below the prior hourly low. So not a single close after the high is formed here. There has been a close below the prior hourly low. Unless I see a close below prior hourly low, I'll stay with my long position. Again, a very simple but powerful technique. You can also see a moving average which I have applied, and this moving average is going to be decided not by the magical number of 20, 50, 100, 200. It's going to be decided by the one which is acting as a support or resistance. So I'm not going to be talking about moving averages in this session. What I am talking right now is the supply and the demand zone. So this on the daily scale, this becomes the demand zone, this becomes the supply zone on the upside. If you go on an hourly chart, similarly you are going to find out the areas where you have seen the reversal in the past. Try to look at the past and try to identify what you have to do near those levels. So if I look at this is the area which becomes the zone of support. You need to be very careful near the zone of support because markets might give a false move like it gave on 19th, just a spike down in the final hour and reversed with a gap on the upside. So these kind of false moves are possible near the support zone. So and then near the resistance zone, again, if you look at this chart carefully, I would also try and connect the tops so that I have a very better indication of where are the clear supplies coming in on the market. Also remember one thing, the intersection of the trend lines do provide a very important reversal areas. This is a very advanced concept of looking at trend lines and multiple trend lines together. The intersection of these trend lines provides the area where we can expect the major reversals to happen. So if you look at it, there is an intersection of this trend line with the horizontal line happening around this zone. So this gives you the time when the reversal can happen. That's again a very classical way of looking at trend lines and channels. I am sure very few might be using such simple concept, but in a such intense format. So looking at this overall trend for Nifty looks bullish, not because I am saying it, because as per the technique that I have just now discussed, the trend is on the upside unless and until we see a close below the prior bar's low. During such scenario, it's best to bet on the momentum stocks. We do provide momentum research report which has covered. So India Bulls was one of the momentum stock that we published, and it's already up by 5 to 6%. I think more than 6% in today's session. The report was published yesterday evening, and it is up by 6% in today's session. So that clearly shows how amazing these kind of techniques are working. And it's not only these basic techniques. I do combine it with the wave theory, neo wave, time cycles, and a lot of those concepts also. So you can understand by using such a simple concept of trend lines, intersection of trend lines, and bar technique, you can make out the trends so easily and so objectively. If you combine a few more methods and important methods, which I'm going to disclose in the Master of Technical Analysis, which is on 2nd and 3rd of March in Mumbai, imagine the power that you get in just 2 days of time. It's going to be tremendous. It doesn't matter whether you are probably a student or a housewife or you are an expert trader already, but there is always something to learn. I keep learning a lot of things from people, and I think that is how it's keep on going on. So if you are learning in the markets, if you are in the markets, you have to keep learning it. The day you stop learning, markets will teach you a lesson, and in a hard way. That is what I believe. So you can, for registering for the session on 2nd, 3rd March, what you can do is you can simply visit the website wavestrategy.com. Once you go on the website, and if you can see the screen, you are going to see it here, the module 1, module 2. You can click on this banner and you will get entire detail of the BMW program. So this BMW program is going to give you insight into Master of Technical Analysis, Master of Waves, and this is what you can become Master of Trades. That is what I believe is possible. You can visit the page, look at the modules, and just go down and probably just very quickly register here. So there is a special offer for family members who are attending at a very discounted price. You can get it for an additional member if you get along with you a family member. I would suggest do not think much about something like this, how valuable it is, because the way it has been taught across on Google has been absolutely absurd. I would say a lot of things are not in the correct way in which it should be understood. And when 90% of the people are losing money, they are the ones who are just looking at Google and trying to figure out how the market should behave by reading it on, searching it on Google. Don't do that. There is a way in which you have to trade. There is a way in which the market behaves, and that is exactly the reason why you have to apply it very rigorously in a different, looking at things very differently. So these are basic techniques, these are important techniques, these are orthodox technical analysis methods, which I still apply very rigorously, even though I am doing advanced Elliott wave and neo wave analysis. And there has been a lot of requests from a lot of traders and even students who wanted to learn technical analysis right from scratch to in the best possible and scientific manner, which I'm going to do it in this 2nd and 3rd of March. So register now, visit the website. We have limited seats. You can register there and I'll take it from there. And trust me, in 2 days, I'm going to give you exact what you have to do in the markets at what point of time, a complete hands-on on how you should be approaching the market from the very next day. And post that on 6th and 7th of April, I'll be talking about how to forecast the market using the power of wave theory. Whatever you have learned on Master of Technical Analysis will be applied along with waves and time cycles, which is going to give you a lethal weapon of which is going to stay back for the lifetime. That's it from my side, and I hope this simple method which I discussed today is going to help you for forming a trade setup for tomorrow, and you are going to be objectively using stop loss and keep a risk reward to the extent which is possible. Keep booking partial profits and keep trailing it to ride the entire trend as long as it lasts. Do not forecast, because for forecasting you need to get hands-on on certain important methods from the wave theory, and I do that very rigorously. For any kind of a momentum research and momentum stocks, you can subscribe to Momentum Stock Research Report from wavestrategy.com and get access there. The stocks are going amazingly well. iBull is already up by 6% in today's session, and we recommended it yesterday evening. That's it from my side, and see you again same time next week. Sorry, on a Friday next week. I came out Thursday because I think markets are at important juncture and you should know the tools which I am currently using. And that's it. Have a wonderful day ahead, and see you again next week on a Friday at 4. This webinar will be available at 5 on the website wavestrategy.com. For any queries, you can call us on 99 204 22202. Thank you.